Hello, hello. Thanks everybody for joining me back here with our good friend Josh. How are you, Josh?
I'm doing great, Jay. Good to see you again.
Absolutely, absolutely. So, I've had a few phone calls. Lots of people are asking me, saying, "Hey, it looks like the bond market's dropping, interest rates dropping." I don't actually know what's going on. Can you fill us in?
Well, that has certainly been in the news and in the media lately. So today is December 6th, and the Bank of Canada made their scheduled rate announcement today. No change to their rate. And as a result of that, the bond market, which is how fixed rate mortgages are priced, got further confirmation that they're doing the right thing. And we've been seeing some downward movement in that. Let me just quickly share that screen here with y'all, or with all of you. And here we go. So right here, we've got the picture of the bonds. If you look at that, back in the spring, where you had fixed interest rates like at 4.3 to 4.5, the bond was nice and low after some banks collapsed in the United States. But then over the summer, as things sort of stabilized, we saw the bond yield increase. That made the fixed mortgage rates also increased. And so they went from that 4.5 area up to like 5.7, 5.8, 5.9 with some lenders. So some pretty significant increases over that summer period. But in the last month, since it hit a high in October, we've been seeing it come down about 1%. But what we haven't seen yet is the fixed rates drop as much. So I think that's important. We've seen fixed rates drop about 1/3 to 0.5%. But now we're expecting, as long as this trend is stable and continues, we should be seeing fixed rates kind of below 5% here soon, which is super exciting.
Right. That's really awesome to hear. And so, is it lagging a little bit until maybe they get some information on like inflation, or what happens with that, or why is it such a lag? And what is
You,
inflation doing? Because it feels
you know
like
what?
that has something to do with
Yeah, it definitely seems to be somewhat lagging. These bond rates do take a little bit of time to adjust. But here, I'll show you one more here, which is the inflation numbers. With the inflation numbers, we saw that peak kind of June 2022 or so, after it had
Right.
been steadily climbing. The Bank of Canada already had started their process of raising interest rates. But since that point, we've seen a steady decrease in the inflation rate. And the most recent numbers are October's at 3.1%, which is almost in that band that the Bank of Canada wants to see it, of between 1 and 3%, obviously with the target right at 2. So that is part of the reason that we're seeing the bond yields drop, and because the expectation of the rates staying higher for longer is starting to fade.
Gotcha. So this should bring some optimism back in our market. Our buyers can maybe cross their fingers. We're going to see some nice new interest rates coming out, and should be good for our sellers as well.
I'm definitely thinking that. It's kind of like setting us up for what happened this past spring. Interest rates came
Yeah.
low in the spring. We saw values increase. We saw a lot more real estate activity happening. And it's definitely looking like we're going to see a repeat of that activity kind of in the first part of 2024. And if the Bank of Canada drops their rate come March, April, as expected, I think we'll continue to see more fuel on real estate and on people purchasing homes, because anybody who's been sitting off to the side is now going to be like, okay, rates are lower, prices are going back up again.
Yeah.
Let's get ourselves into the market before the prices go up too much.
Yeah. Awesome. So we can definitely help anyone who's watching with either of those things. So you need a mortgage, reach out to Josh. When you're done with Josh, reach out to us. We'll show you around. Thanks for joining me again here today, Josh. And we'll
Thank you
see
so
you next
much,
week.
Jay.
Good.
Awesome. Thanks, man.
Take
Bye
care.
bye.